India gold share in foreign exchange reserves has climbed to 16.7%, showing a bigger hedge inside India's reserve strategy. The shift strengthens diversification away from currency exposure, but it also raises the classic trade-off. Gold protects value without paying interest. The confirmed event is that India's gold share in Forex reserves rose to 16.7% in 2025, while holdings are described as over 800 metric tons. The reason this belongs in a crypto news read is that central bank reserve choices matter for currency stability, dollar exposure, inflation hedging, and confidence in emerging market balance sheets. The opening pressure point is gold, reaches 16.7% of reserves against dollar hedge with opportunity cost. The first confirmed detail is gold, now makes up 16.7% of reserves, and the immediate reason to care is that holdings are described as over 800 tons. That means the viewer should track RBI reserve data instead of treating the first reaction as the whole story. The baseline keeps the story grounded. The confirmed baseline is a larger gold allocation inside India's foreign exchange reserves. The article evidence says holdings rose from 650 tons in 2022 to more than 800 tons in 2025. Without that frame, it is too easy to treat the event as bigger or cleaner than the evidence supports. The two facts that set the baseline are clear. The share has risen from 2022 levels, and the reserve mix moves away from dollar exposure. That frame keeps holdings exceed 800 metric tons connected to the actual consequence rather than floating as an isolated statistic. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. In the India gold share story, the mechanism is straightforward but important. The mechanism is reserve diversification. Gold does not depend on another government's promise the way foreign bonds do. That reduces counterparty exposure, but gold also lacks coupon income and can create opportunity cost when yields are high. The viewer should focus on how that mechanism changes access, risk, cost, or trust. In practice, gold cuts counterparty exposure is the hinge between the confirmed event and the next market or user response. The mechanism split is simple. Gold avoids foreign bond counterparty risk, while it does not produce coupon income. If that hinge fails, the strongest title-level claim loses force even if the story keeps attracting attention. The affected side is where the story becomes practical. The RBI, rupee watchers, bond investors, importers, and macro traders are affected by the reserve mix. The practical consequence is a stronger buffer against dollar volatility and inflation shocks, with less income than interest-bearing assets. A higher gold share can support confidence, but it cannot by itself fix trade deficits or commodity import pressure. The useful boundary is that rupee confidence gets a buffer, while the future share is still open. The impact split is a larger buffer can support confidence and import costs still depend on trade dynamics. That keeps the impact focused on the people, markets, or systems actually named in the evidence. The confirmed facts stop before the unresolved piece. What remains unclear is whether the gold share keeps rising toward the projected 20% level. That does not prove that gold purchases alone guarantee rupee strength. A better read needs future reserve data, gold prices, and RBI purchase pace will clarify the direction. This is the line between analysis and speculation. The unresolved split is gold does not guarantee rupee strength, and opportunity cost rises when yields are high. The story can stay important while the future share is still open remains unresolved. But the stronger claim needs visible proof. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The clean trigger to track is this. Watch RBI reserve releases for purchase pace and the next change in the gold share. If official reserve data shows continued buying or a pause, the story can move from allocation shift into reserve trend. For India gold share, that is the follow-through that matters. The trigger split is official reserve data is the next trigger and purchase pace will show policy direction. If that trigger does not arrive, the story may stay in allocation shift longer than early attention suggests. If it does arrive, reserve trend becomes easier to evaluate with facts instead of assumptions.